Hello and thanks for checking out TheChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts.
Hello everyone, hope you're doing well. Haven't checked in on the MJ sector in a while. We've certainly been covering it in the chat room every day, but in terms of being able to put out a video at the end of the day, certainly been a very busy week. But anyways, here we are now. A couple things I want to point out before we get into it. Number one, I'm not looking at moving averages on these charts right now. The moving averages that are currently on there are just in my default settings from trading cryptocurrency, so you can ignore them. And I do use the 20-period 5-minute moving average a lot when trading, and I use the exponential moving averages, the 4 and the 8 period, on the hourly time frame most of the time to see where resistance is on bounce attempts. But for this video alone, I'm just looking at price levels, and we're going to look at trends, and price levels are the most important things for trends, and moving averages not so much at this point. Another thing is, I keep saying, you need to be aware of what the overall market is doing. The correlation to the S&P 500 is varying constantly. It's very strong sometimes, it's weak, it's opposite, it's all over the place. But knowing the general going-ons of what's going on in the market is important. And check out the video that I just made. I make them usually every day as well for the overall market. But why it's important is because of the psychology of the market. If everybody's dumping Amazon, Netflix, Facebook, and all these names that are, huge players, big companies, they're not going to have the confidence to go into Canadian MJ. Canadian MJ right now is a very high risk, high reward sector in terms of the general market and, what people are looking to get into. They want, big money's looking at more proven names. And if they're not comfortable in these proven names, they're not going to be comfortable in the Canadian MJ sector. So we need to be aware that if the market gets really ugly, the Canadian MJ sector is going to suffer as well. And the market has been getting pretty ugly. And there's a really clear setup for early next week that I highlight in the video that I did just last night. So overall market is definitely a factor. I'm all cash, and if you are not in all cash and you are holding a position, you're a long-term investor, and that's fine. There's nothing wrong with that. You have the long game, and you're probably going to come out just fine. But in terms of controlling our emotions and not getting angry at people that are calling for, pullbacks based on the technicals, that's important. So if you find yourself getting triggered by, people looking for the price to go down, that's a good time to zoom out and look at yourself and say, okay, why are these emotions being triggered in me? And maybe you can learn a little bit about yourself upon reflection. So I'm very happy all cash right now, and I would love if the Canadian MJ sector dumped, and that's just because I'm going to get really cheap prices and longer term entries again. If you've been following the chart guys for the past year and a half, we did this exact same thing last year. The sector started showing bearish signs at the end of 2016, started 2017. We went all cash. We made short-term trades on the way down. And then we made longer-term bullish entries in July when the trend changed back to the bulls. So here we are again, back to all cash, waiting for an entry opportunity for long-term positions. What I anticipate the market doing just psychologically, and then we'll go into the details of these individual charts, I anticipate consolidation in the spring and the summer. I've been trading MJ stocks for 8 years. It's a very cyclical sector. Always, we see strength in the fall and the winter. We see weakness in the summer. I didn't even look at USMJ in the summer for year after year. Granted, absolutely, this is a different sector. There's different things going on. That's going to make things different. We don't know what's going to happen, but I am looking at the history to say we could very easily pull back April and May and have red months. It's entirely possible, and the current setup that we have favors that. So if that's the case, I will be looking for the bulls to start showing up as we head into the middle of the summer. At this point, I'm anticipating the doors to open for legalization late summer, early fall. And that means to me that that's going to start getting priced into the market maybe in June. We have that final reading in June, so that may be a little catalyst, but watching for the signs of slow accumulation and a trend change back to the bulls in the summer as we head into the doors opening event. So that's where I stand psychologically. That's my general overview of the market. And now we're looking at the little details. So MJ here, we're going to look at MJ and HMMJ for ETF comparison. We just broke down to the lowest price in 3 months. It's the lowest price of 2018. So pretty soon we're going to be at an area of no support. And I don't really count this action because this is before the ETF switched over holding cannabis names. And we're now at all-time lows. As far as I'm concerned, the MJ ETF for Canadian marijuana is at all-time lows, which means no support. And that's obviously not a good thing for the bulls. So we're going to be looking down at the low of 28.47, then 28 psychological. And the bottom line is we saw a bounce start on Friday, but we're going to form a lower high. Look at how many red days we've seen in a row. Obviously, we are in a bearish trend right now. So the last bounce attempt that we had lasted 1 day, and we rejected from 32.40. Anything under 32.40 is just a lower high on this daily chart. And you could also make a case for this being a lower high here where we bounced and got rejected. That was at 31.62. But either way, we are still 8% below the last lower high. So even if we do get follow through in a couple green days in a row, we have to anticipate a lower high is going to be set here on the daily time frame. In order to change the trend, we will have to see a lower high, a higher low, and then a higher high to shift that momentum and have us look bullish again. The clear red flag, number one red flag, was losing the support level. This lost the higher lows. We had our bounce, higher low, higher high, and then we lost the higher low pattern. So the big red flag was 30.57 breaking, and after that level broke, we dropped 6%. So that was the loss of the higher low pattern, putting the bears now in complete control, and we'll see where our lower high forms sometime next week. The more bounce the bulls can get, the more likely a higher low on consolidation after the bounce will be, but it all depends on the follow through, and we're going to be watching the volume. Look at the increasing bear volume, and look at that bull volume not really building too much confidence. HMMJ is holding up a bit better. We still have support levels. We did break this level just like MJ did, and that's a red flag. The bulls are trying to get back over that level right now, and they did close over it on Friday. But aside from this level, we're looking at 16.48, the low of last week, and then $15. That's a must-hold level in order to not break this trend. And just looking at the weekly time frame, longer term, if we were to break $15, it would be a clear lower high and lower low and very clear bear break. So that's something that the bulls want to maintain ideally as long as possible. But the same thing here, the last bounce attempt, the bulls made their way up and rejected at 1968. Anything under that level is a lower high. That's 10% from where we currently stand. So again, we're not going to break that level on this bounce. It's very unlikely. We're likely going to see a lower high, and then it'll be up to the bulls from there. We have an inside bar here on HMMJ. Again, bear volume compared to the bull volume, bears are winning very easily in the category of volume. We'll see if we can confirm these reversal candlesticks on Monday, but even if we do, we're not looking at any kind of trend change. WEED is the saving grace for the Canadian MJ sector right now, and that's because it's the leader and it is still holding a higher low pattern. So we can see every little consolidation here, 30.10, 30.70, 31.34, 31.37, a little double low right there. That's the most important short-term support. And I'm looking at resistance of 34.71 and then 35 psychological and then 35.63 from a resistance back here. So as long as this level holds 31.34, the bulls maintain control of this daily trend. And as long as that happens, the bulls in the Canadian MJ sector have some hope. But there's so many individual names that are nowhere near as strong as WEED on the daily time frame that if we break these higher lows on WEED, that's pretty much going to say, okay, we're going to see a bearish spring. And that doesn't necessarily mean we're going to dump, down 10%. That just means it's going to be hard for the bulls to gain any traction and any momentum and any follow through. And that we could see it last week where WEED had a clear bull break in this uptrend of resistance and couldn't get much follow through. And that's because of market weakness, in my opinion. And again, people aren't rushing into Canadian MJ right now, knowing that we're months away from legalization, knowing that the overall market is on shaky legs right now. It's definitely a factor in what's going on. So as we head into next week for WEED, there is a potential bearish reversal head and shoulders pattern to be watching. This is the 4-hour time frame with the left shoulder, the head, and the right shoulder with the neckline both at the same level. If this neckline breaks, we lose the daily higher low pattern and we start to see a downtrend. So the bulls really want to hold that support and break that 34.71 resistance level first thing Monday. That would definitely give the bulls some confidence for follow through. So that's where we stand there. ACB played ACB on Friday for the oversold bounce, and that's just because the hourly RSI, all you got to do is look back historically. What happens when the hourly RSI dips below 20? The answer is we bounce. It's very common. I was very comfortable scaling into this position, made my first entry in the 880s. A lot of members made entries in the 880s, and then I added when we got our first bull break on the short-term time frames at about the new high of the day, right around 9. So a nice solid gain on the day, and I did swing a little bit. I kept a partial position. I think I locked in maybe 70% of my profit, and I'm holding 30%. We'll probably lock it in on Monday. Again, when you're playing counter the trend, you need to be quicker to lock in gains because lower highs are the likely result of any bounces. So here's ACB, and the clear red flag on ACB, there were a few of them, but the most notable one was right there when we lost this level of 953. Look at the lack of support after 953. Here we are bouncing off of 881, but this is just an oversold bounce at this point, so we have to be cautious. Again, anything under the last bounce attempt high of 1040 here is just a lower high, and that's 10%, over 10% from where we stand. So if we bounce instead of lower high, we have to be cautious for the potential of a lower low as well, and the lack of support down here. Aside from 880, I'm just looking at psychological levels, 850, 8 even, 750, and then 711 is the level all the way down here. But again, obviously we are in a bearish couple of weeks here. The market is showing weakness, and the Canadian MJ sector is as well. Weekly time frame still holding on. That's the must-hold level of 711. If we break that level, it's a very clear bear break, and bulls ideally want to hold that level all through spring and summer. So we'll see how far the bounce goes. We'll see if we can confirm the reversal candlestick with follow through on Monday. But again, we're not looking for any kind of trend changes unless we see increasing bull volume and, some good news. We're not looking for any kind of trend changes here. We're just looking for daily lower highs on this bounce, and the change in trend is going to be a while away. Checking on APH, it is the weakest name right now in the short term. The red flag on APH, let's look back at history and say, okay, when did the trend change? And if you're still holding right now, you could say, okay, next time I will learn this lesson. The higher low pattern right here was broken. That's 1387. So we have our higher lows clearly intact, and then we lose them, and then we just start seeing lower highs and lower lows. That's the shift from higher lows and higher highs to lower highs and lower lows. So the clear red flag was 1387, and then we dropped down, almost 20% from that level. Every single bounce attempt, this is what I'm looking at for the Canadian MJ sector next week, every single bounce attempt is a lower high. It's just keeping the bears in control. Anything under 1234 is a lower high, and again, that's a little bit less than 10%, maybe 8% from where we currently stand, but the bears are still in control. We don't even have a bullish reversal candlestick on Friday like most individual names. We closed very weak. Look at the lack of support. When's the last time we were at this price level for APH? And the answer is back on December 4th. Now, there's some shares coming over from the merger deal. That's definitely a potential factor in terms of more supply of shares, and that is something that is going to weigh on the bulls a little bit, and eventually it'll be priced in. But it's clear that we are weak here on APH, and the difference, we already had the must-hold break. The must-hold level has been breaking a couple times now. So it's just lower highs and lower lows on the weekly now, a very clear pullback, whereas ACB and WEED and most of these other names have not broken the must-hold level to keep support level on the weekly time frame. So where we stand right now, APH is the weakest, WEED is the strongest, and ACB is around in the middle. Cron here has been pulling back in a huge way. We saw the MJ ETF drop its holdings a bunch on Cron, so that was definitely a factor. There was some selling going on there, but we're doing the same thing here. Look at the lack of support. Under this level of 820, it's 8 psychological, 7, 750, 650, 6. It's just all psychological levels because there is no support established here. So we have an inside bar on the bounce attempt, not convincing at all for the bulls. Anything under these bounce attempt levels, 1185, is a lower high. We're 30% plus from breaking this trend. It's just a really strong downtrend on this daily time frame. We look at the weekly chart, no huge red flags. This would be the huge red flag, breaking that low of 596. So we still can form a higher low compared to that level. The weekly chart, again, we pulled back very significantly, but as far as weekly charts go in the sector, there's no major red flags at this point. So that's what I'm watching for the sector. Again, short term, bounces are short-lived, bulls are taking their profits sooner, and we're not expecting any kind of significant trend changes unless there's some surprise kind of news, or that's pretty much it, in my opinion, as to what could change this for now. So again, be prepared. If you're a long-term holder, be prepared and say, what am I going to do if we're going to go bearish for the next 2 months? And if your answer is hold, that's completely fine. That's the decision that you can make. And otherwise, there's shorts that are going to be making money. There are those of us that are going to be flipping short-term bounces on the way down, and we will be looking to load longer-term positions later in the summer once we see the daily trends begin to change. So I appreciate you watching. Hopefully this was a little bit helpful, and we'll see how it plays out. Again, if it starts to bounce, we'll make money on the way up, and if it keeps dropping down, we'll patiently wait for better entry opportunities. And again, it'll be a call out to those that I'm friends and family with that are not familiar with the stock market, I will be saying again, just like I did last summer in 2017, I will say, we're getting into some long-term entry opportunities. This is a good time to be looking for, multiple year entries. So that's what we're patiently waiting for. I appreciate you watching. Have a good long weekend.